webinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
Okay, so let's try this now. Sorry for the technical glitch. I just don't get it. I mean, God, I must have done a couple thousand of these and don't do anything different. So technology, boy, drives me nuts sometimes. But that's why I do the trading support here, and I don't do any technical support. That's not my game. All right, good. I think we're back in business. Sorry about that. No, just weird stuff. Okay, screen's on. Good. Okay, great. Thanks, Rick, Deborah, Mike, everybody, Stephen, James, Raymond, Chris. Thanks for saying. Okay, so let's jump in now. I'll start all over again. Oh man, not fun. Anyhow, this is your 130-minute daily chart. Love this chart, especially for swing trading, stocks or options, whatever you like, shares, options. But it would be for stocks only, not for futures. Really, really, really good chart. Really helpful. You get 3 bars per day, and it's the same colors and dots, same rules and everything. We're looking for a blue bar, and the first time we get a blue bar and a blue X. You'll almost always have the little blue dot, so that's okay. Blue bar and blue X. Blue cross, blue X. Now the big blue dot, some people seem to be getting confused. A few people seem to be confused about it this week. The big blue dot only comes in when you get the first blue bar. If you get stopped out, like right here where we're stopped out, you're not going to get another blue dot because the bars don't turn to red. Next time you get a big dot, will be red. So it goes first blue bar, blue dot. First red bar, red dot. Just goes back and forth. It's just a warning is all it is, telling you, hey, there's a trend change. Blue would be up and red would be down. But if you have a blue cross at the same time, now we're good. Up and away it went. So we got in over here at like 194 and we got stopped out right here because the stop goes on the second lower or previous lower blue dot below the price. Now we're out at 208. That's $14 a share. That might happen once in a decade. So, because of this, great volatility we're having in the market. I mean, it's just been a pretty fantastic month, and it's been the biggest winning month in 33 years for the market. So it's basically been just an extremely strong uptrend. I mean, almost like never seen before in the past 33 years, because April was the biggest gain in 33 years in the market. So what does that tell you? Well, it tells you that the uptrend is going to be many times stronger than the downtrends. Pretty cool stuff. So, we're just going to use it the same way. It doesn't matter what you trade because it works the same for stocks or futures. It doesn't matter. Currencies, it doesn't matter if you trade short-term or long-term. Just as many people, like to use it for the long-term. But, it's very popular for intraday trading because that's what a lot of people like to do. At least that's what most people want to do. But I mean, this swing trading chart is just outstanding. You can pop anything you want here. And the way you change the symbol is you just simply click on it, like AMZN. All I did was start typing on the keyboard. I didn't touch anything. I just started typing. The box pops up and you click one frame. Instantly, it changes to Amazon. Now, Amazon, if you're using our signals, and I always tell everybody, compare it to what you normally use. In other words, before you got a trial with AbleTrend, keep using what you were using, or at least compare it at the end of the day or the end of the week and see what worked better. To me, that's the best. That's what I would do. That's the best way to find out, hey, is AbleTrend better than what I'm using now? If it's better than it is, great. It's definitely worth buying. If it isn't, no, it's not worth buying. So just continue to compare it if you're new on your trial. Just continue to use it. Yes, Jack, I'm using TS, AbleTrend TS. So right here, if you were using Amazon almost a month ago, right here on Amazon, if you're using our signals, I mean, AbleTrend there's your perfect first time you're getting the blue X and the blue price bar. Now it happens to have the blue dot because it was the first blue dot, the first blue bar. Great. It doesn't have to, but the trend was changing at that time, and we already had a blue cross, meaning the daily chart already was on a buy signal. Well, that makes it easy. Your daily's already on a buy, got a blue cross, and you got the first blue bar on the 130-minute chart. Well, that's about as simple as it gets. So AbleTrend, would have bought it or suggested buying it here at 1970 until we were stopped out over here at 2270. That's a 300-point winning trade. You got a call option on that one? Whew. We're looking at some major money right there, big time money. That's, for 2 weeks. Cool stuff. Now let's jump in and take a look at the mini NASDAQ because it was a horrible, ugly, choppy, losing day. I tell it like it is. I don't just cherry pick winning trades and winning charts. I've showed you the NQ chart for years and years now, the 1 minute, 3 minute chart. You can use the 1, 2, 3 also. That's fine. That's why I look at 1, 2, 3. If you're new at AbleTrend, you might find it a little confusing. 3 time frames into one. Keep it simple. Just 1 minute, 3 minute. That's fine. It's basically the same thing. I don't want to confuse anybody here. If you like a little longer time frame, a 3 minute, 9 minute works really well. Now today, nothing worked. It was just a choppy, ugly mess. But we were really overdue for a losing day because we've had I can't even tell you how many weeks in a row now. We haven't had a losing day, but today was made up for it today because today was definitely a really, really choppy, erratic day. And it's going to happen. I can guarantee you that it's not going to be perfect. We haven't had a losing week this year, not one, but we've had losing days, and we certainly have had losing trades. I can guarantee you that for sure. So, taking a quick look at it, I'm going to run through this a little bit quick. Oh, by the way, because a couple of people have asked about using a little longer time frame just to get kind of an overview, because sometimes we get tunnel vision, we're only looking at the 1 minute. But sometimes when you step back, like when I look at it, a chart all day long, I look at it like this. I look at it like I zoom out so I can see the big picture. It's just personal preference. But like here at the 8:30 news this morning, you can see it went down. It went down hard. Okay, so right away it's like, okay, same thing on the 3-9 chart. Okay, so we're starting off down, but I've got to tell you, almost every day now, and I watch it minute by minute, almost every day it's been down morning, up afternoon. In fact, we've only had one afternoon where the market didn't rise in the last hour of trading. And you probably notice that yourself, because sometimes common sense, is the best thing to use, your common sense. But to me, it's so obvious because, if you watch it every day, you just notice the really clear, obvious patterns. Who knows what's going to happen tomorrow? But all I can say is for the past month, it was only one day out of the whole month, meaning almost every day, the last hour of the day, the market went up. Interesting. What does that mean? That means we're in a strong uptrend. I always look for that last hour of the day, the afternoon trades, and see which way is the market going toward the end of the day. I don't mean the last minute, the last hour or two, and I'm on the East Coast, so the market closes at 4. I always like to see what happens from 2 to 4, from 3 to 4. When the market's going higher, that usually means you're in an overall uptrend. last month, the market was crashing. The last couple hours, boom! It just, every day, the last hour, it just got slammed down. Now every day, it gets slammed up. It just melts up. It's like a rocket ship. The last hour. Yesterday, I believe, was the only day. Or yesterday, 2 days ago, I believe, was the only day that it was down in the last hour. But we're looking for triple confirmation, so that's all. That's all we're looking for. Keep it simple. Remember, the further below the red dot you are, the small dots, like right here, look how far compared to the rest of the chart here, you're way below the red dot. Well, look what happens a few minutes later. It goes right back. So you don't want to ever start your trade this far away from the dots. And these are just a couple of little innuendos. That's why I only talk about this in the advanced webinar. I'm not trying to confuse anybody because we keep it very mechanical and very robotic. You have to trade your signal, not your emotions, because your emotions and mine, what I feel like, that's a guaranteed, way to lose long term. There's no way you can be consistent. I guarantee you, I would have no chance. Yep, Sid says he likes to keep track of the high and low of the day to keep a pulse of the market. I agree with that. Makes good sense. I always like to see what's the high and what's the low, because the price has a really hard time usually breaking a new high or a new low. It usually kind of hangs there for a while. Just, simple stuff. Common sense, kind of simple stuff. A little trade savvy. Thought I just kind of throw that out there. So another thing was the long price bars. A really long price bar, generally the market tends to go the other way. If you get a long time, if you get two in a row, like right here, two longer bars, then really going to snap back. Why? Because all the sellers are piling in at the same time, and temporarily you've exhausted all the sellers. There's only buyers remaining, so it goes the other way. After long bars, the shorter the bar and the closer to the blue dot, the lower the risk by far. The same way the red bars, the closer to the red dots and the shorter the red bar, the lower the risk. The longer the bar and the further away from the small little red and blue dots, the higher the risk. I'm just throwing this out here for things to look at when you're watching it, so that you go, okay, yeah, you know what, this makes a lot of sense. The tick chart, Jack, as I always say, the tick chart only is used for sweet spots. The 200, 500 tick chart is only used for sweet spots. What's a sweet spot? This is a sweet spot right here. When the prices pull back up to the red dot, they bounce off of them, the next red bar, that's a sweet spot right there. Tick chart did not agree at that time. I was watching that live. So we did not take this sweet spot trade. But we started off okay today. This was a good trade at the beginning, and then we had like 3 or 4 losers in a row. That's a perfectly valid. Oh, right here is the 930 open. Right in there, the bars get a little shorter. There's where you want to go short. Came down very nicely and first traded. There's your 2 green bar. Stop, because we were winning about 20 points at that point. So the first trade of the day, we're stopped out there. First trade of the day was good. Picked up 20 points. Okay, great. However, we had 4 losing trades in a row. Triple confirmation right there. Put your stop 1 point below the bottom of the blue bar. Stop out. Same thing here. Same thing there. It goes, well, on the red bar, of course, it goes 1 point above the top of the red bar there, and then the dots come lower. Well, either way, that was about a break even. But this is a valid buy signal right there. That turned out no good. We'd be out over here on the red bar, red dot, whichever comes first. If a red bar comes before you hit your stop loss, then of course we're out. Because technically the stop goes right there, 1 point below the bottom of that blue bar. But the red bar with the red bar came in, closed red bar come in, so we're not, we're going to be out even quicker, which in this case was kind of good, because otherwise we would have lost even more on the trade. There's your triple confirmation sell signal. This one worked out well. Stop goes 1 point above the top of the red bar right there, and this one it was a little rocky here. went down, then it shot up. It's like, oh, we're almost going to get stopped out. But no, we didn't really even come close. And perfectly fine. Once you see these little shorter bars, that's a good sign that, okay, we're definitely would want to get in at that point on one of these shorter bars. Stop still goes up there, but this turned out okay because there's our two greens, and we were stopped out right there. Here's the two green in a row, and from here to here it was another 20 points. So we picked up two 20-point winners. However, we had three 10, at least 10 to 12-point losers in a row. So really, we were only about even at this point. Stephen says, when you enter at a sweet spot, is it on the second red bar after the green bar? No, the first red bar, basically a sweet spot, is the first red bar touching a red dot, as long as the tick chart is also red. No trade there. No, these are all sweet spots. Tick didn't agree. Tick finally agreed about there. That's when the tick finally agreed. So that's fine. Red bar touching the red dot, or right next to it. I mean, close enough. It doesn't have to literally be touching it, but if you're a couple ticks away, I mean that's fine. So what is a sweet spot? A sweet spot's very simple. It's a red bar right up near the red dot. A blue bar right up near the blue dot. That would have been a sweet spot on the buy side. However, tick chart did not agree. In fact, we weren't even stopped out on. We were still in the trade from the beginning, but we were clearly out on the red bar right there. You just want to see the tick chart. This is a really fast chart, so you want the tick chart to already be in that direction. That's all it is. You want the tick chart, which is faster than the 1 minute, to already be going in that same direction before the 1 minute finally catches up. Okay, we're rolling right along over here. Yeah, the 1217, the tick chart. Let's take a look at that. Nick wants to take a look at the tick chart here. Oops. I click on the G1. And it would be right in there. Oh, that was the next bar. What's the next bar after that? There you go. So right here, Nick, you want to have you got a red X, you got a red bar. So there's where we're going to get short on that trade. It was only a break-even trade on the sweet spot. The original trade from the beginning worked out great. That was a 20-point winner. This triple confirmation trade there, and we were ticked out right there, 1 point above the top of this bar. So that one worked out great. The G1 button, notice the black line on the 3-9, the tick on all three charts. When you click on the price, it goes to all the charts. It's great. It's a great feature. You don't have to calculate each specific chart. For example, the buy signal, not here. These are the small X's. We don't get in on a 2-minute X. We get on a 3-minute. Oh, green bar, blue bar, blue X. There's where we're going to go long. We're stopped out right there. We were stopped out on that trade. These dots are slightly lower than these dots. Losing trade right there. Of course, that's during the dead zone. And when you see how choppy the morning is, I'm not trading during the dead zone. 12:30 to 2 o'clock Eastern is the dead zone. And if it's a choppy morning, leave the dead zone alone. Back in, now I always notice 2 o'clock, almost every day at 2 o'clock we get a buy signal. This one didn't turn out to be a winner, but stop goes 1 point below, stopped out right there. Lost about 5 points in that trade. Another triple confirmation valid, stopped 1 point below, lost 5 points on that trade. Chop City today. Finally, at the end of the day, as almost always, that last hour, do you ever trade? Yeah, you certainly can trade during the dead zone. It's optional. Dead zone's optional. If it's a kind of a smooth morning, things are really going well, yeah, I would trade during the dead zone then. But if it's a choppy morning and the VIX is low in the teens, under 15, I wouldn't trade during the dead. But the VIX is in the 30s. It's been 30, 40, as high as 80, for 2 months now. So the dead zone's definitely alive, but you know, if you're getting chopped up in the morning, the dead zone's usually choppy even on good days. So I would not trade during the dead zone on a choppy morning. But if everything's going well, hey, yeah, go for it. If you're in the trade, stay in the trade. But there's your 2 o'clock trade. There's a triple confirmation sell signal right there, and that one turned out to be a small losing trade. There was a nice winning trade right there, and perfectly fine to get in on that second bar, which is a shorter bar. You know, and that one did pop up nicely. We picked up about 10 points because there's our 2 green bar stop. And then there was actually another little trade toward the end of the day, but I can understand this was like 10 minutes before the close. So if you didn't take that one, fine. It was basically about a break even on that trade too. We'll see what's going on. Right now, the futures are down. Again, long way till tomorrow. they could be up. They could be limit up a couple hundred points by tomorrow's close. We'll see what happens. I believe there's going to be news tomorrow. It's the first Friday of the month. I wonder if they're doing. They're usually the first Friday of the month, 8:30 in the morning Eastern. They do the unemployment report, which obviously is a huge report. With as many people that are out of work, which I feel terrible for. Okay, pretty cool. Yes, good point, Rick. The last long of the day was bumping against resistance. It was right on top of the 3.9. It was right on top of the 3.9. The only reason that, yes, you're right, Steve. The only reason that I would still take it if it's the end of the day, only because the end of the day trades have been almost automatic the last hour of the day, as I'm sure you watch it. I mean, you guys watch it every day. I'm sure, it's obvious to you the past month, the last hour of the day, the market goes up every day, but one day in a month. So, but if it's bumping right up against this 9-minute X, perfectly fine, to just, skip it. Now, somebody was asking me, a couple of people asking about a longer chart to look at. They wanted to look at, I said, well, I look at the 3.9 also. I said, no, it's a little longer. Here's a 15-minute, just a standard 15-minute chart. No guidance chart, just one time frame, 15-minute. Look at yesterday and today. Does it get a whole lot better than that? Now, that does not mean don't trade. That does not mean, it's next Friday, the non-farm payroll, the payroll report. I thought it wasn't tomorrow. I don't know why, because it's the first Friday of the month, which is tomorrow. But anyhow, it's tomorrow. It's next Friday, May 8th. You're going to get a big report. Who knows what that's going to bring, but 8:30 in the morning Eastern. I don't think I want to be in the market at that time because it's going to probably be pretty wild. Thanks, Michael. Yes, you're right, sir. This is a 15-minute. Look how smooth up. Look at when you say, how do you look for a smooth chart? Well, you don't want to see a lot of color changes. Obviously, you don't want to see a lot of signals. But look at yesterday's signal, 8 o'clock Eastern. One signal, one trade all day long up. And look at today, early in the morning, one signal down. I say, what is this? That was right after that was exactly at the market close. That was right at the close, as I said, that last half hour. That last half hour today, as you can see, the market popped up. But I'm just saying, if you like to look at a little longer time frame, I'm not suggesting to use this or anything. I'm just saying because some people asked me, hey, they want to look at a little longer time frame. A 15-minute chart is a good one. It's a pretty cool chart. And as you can see right now, the futures are down. But doesn't mean anything. Tomorrow they could be up. I mean, it's such a super powerfully strong uptrend the past month. Again, it's the biggest uptrend in 33 years. The biggest gain in 1 month for the market in 33 years. That's how strong this uptrend is, coming off, of course, last month, which was a big down month. I mean, it's just insane. It's like a rocket ship, this market. It's unstoppable. We'll see what happens. I mean, there's only a handful, like 2 or 3 losing days in the whole month. That's never happened in the last 33 years. No, you wouldn't want to use this chart you can use it to trade, Bushan, but this is just for an overview. It's too much risk to use a 15-minute chart. Your stops are going to be 30, 40, 50 points away. So I wouldn't use it to trade, but I'd look at maybe just as an overview, just sort of okay, which way is the bigger trend going? Sometimes you or I, sometimes people get focused in on the 1 minute, and sometimes you take a step back and look at the big picture, everything becomes a lot clearer. Okay, thanks for being here, everyone. Yeah, you're right, Skip. Thanks for being here, everyone. And yeah, Michael Z saying he's been watching the 5 and 10 minute chart and noticed prices come right up to the dots and stop. Yes, sir. Yeah, you can trade the 3 9-minute chart. Of course, Bushan. I've said that many, many times. There's going to be bigger gains, but of course, there's going to be bigger risk because your stop losses are very further. Whether it's AbleTrend or any other chart or any program in the world, the higher the time frame, usually the bigger the gains, the bigger the reward, but the bigger the risk. Your stops will always be further away. So your losing trades will be bigger losses, but bigger winners. Most people can't handle that. That's really hard on the mind. That's a tough one to handle. However, absolutely, you can trade a 3-9 chart. 3-9 chart's been fantastic this year. Absolutely unbelievable. Huge winning days. I mean, thousands of dollars per day on some days, not a week or a month, on some days. However, on the losing days, you're going to lose a lot more too because your stops are further away. Not a lot of people have the risk tolerance to handle a stop that's that much further away than the norm. That's the main reason we use a 1 minute, a 1 minute, 3 minute. But the main reason our base chart is the 1 minute because your stops will be, you can't get any closer than that. Your stops, meaning your risk or your stops, will be much closer to the price. And almost everybody I talk to, day traders that I talk to, are a lot more comfortable keeping their stops a lot closer. The problem is what most people do is they put their stops too close. I've talked to so many traders who trade big money, and I agree. They tell them, and I agree with what they say, is the biggest downfall the biggest mistake most traders make is put their stops too close to the price. They think they're doing good because they're lowering their risk, but the problem is if it pulls back, hits your stop, goes back up again and shoots up, you miss out on that trade because you had your stop too tight. Just use the AbleTrend stops. They're there for a reason. They're already being calculated with all the calculations that's being done. And yes, Rick, you can certainly trade micros on the 3-9. You can trade it on anything you like. Yes, sir. All right, thanks for being here, everyone. Hope this was helpful. Stay safe.